John, we've seen a lot of private equity firms or more using the public markets as an exit. Do you expect that to continue next year?
Historically, if you look at private equity, about a quarter of all the deals have actually gone to the public markets as an exit. I think that should actually increase in the course of this cycle, and we could see more like a third of the deals take that route. What we're seeing is that there's an enormous amount of demand from buyers for world-class companies that are reemerging into the public markets.
We've also seen private equity firms, in the absence of deal making, focusing on their portfolio companies, and now many of them talking about it's time to grow those. Do you expect deal-making M&A activity to add on to those portfolio companies?
Yeah, absolutely. I think all companies, whether they're privately owned or publicly owned, are, now that they've made it through, have refocused on what are they going to do for growth. And for many of the sponsor companies where they paid a very high multiple, the best way that they can achieve an exit that will be at that multiple or greater, or recover the amount of investment they put in, is going to be to find opportunities with synergies and where that they can grow and prepare to get back into the public equity markets.
And will financing be available to allow that to happen?
Yeah, I think I've been very heartened by how quickly the financing market has come back. I think it's come back in a very disciplined way. I think that more long-only buyers who really think hard about what they're buying and what they're investing in are doing real credit analysis and deciding what to invest in. And I think there's a lot of depth there. We've seen that with some deals over the course of the last couple months that were much more aggressive than people would have guessed even 3 and 4 months ago. And I think that we'll see the several billion-dollar LBOs in 2010.